Okay, peeps, welcome back. So today we're going to be talking about 5 reasons TSLY could be the GOAT of YieldMax with the TSLY ETF. Let's get it. So the first reason that we're going to talk about today is market capitalization and why this is so significant. As you guys can see on the charts, the previous all-time high here was at $430. We are currently at $270. So if we were just to get back to those highs, the market cap would increase substantially by about 50%. And the price appreciation would also increase by 50%. That does not include price discovery after a 3-to-1 stock split. So, what is Tesla's current market capitalization? Well, it's 861 billion. So, based on the numbers, we could assume that roughly about another $400 billion would be added to Tesla's overall balance sheet, which would put the company at 1.2 trillion. They did hit a trillion before. They're already in the trillion-dollar club, so to speak, but they would be firmly in it at that point. And another thing to keep in mind is that a lot of hedge funds and institutions are underweight in Tesla. If you don't believe me, you can look this up yourself. Probably more than any other tech stock, they're more underweight than in Tesla than anything else. So the number 2 reason is because crypto is cyclical. And so basically what I'm trying to say here is that Tesla, unlike crypto, is not cyclical, at least unless there's mass adoption. Again, the Bitcoin spot ETF is being circulated through the SEC right now. They have to make a hard choice. Do they want to approve it? Do they not want to approve it? Because the courts came out and basically said to SEC regarding Grayscale, more or less, this is not verbatim, but regarding Grayscale, they did basically say, like, hey, you guys don't really have a basis here to reject the spot Bitcoin ETF or the transition from a futures based or whatever kind of ETF they have to a spot Bitcoin ETF. And so if mass adoption happens, obviously that could change the picture, but most likely the cycles will still stay the same. They've been that way for years. Actually, they've been that way for over a decade, truthfully. So if we take a look at Bitcoin, you can see exactly what I'm talking about here. So you have, for those of you who are new here, you haven't seen this before, you have your halving event here. And then about 5 or so months afterwards, you have this huge run up. So basically from November of 2020 until November of 2021, you have a 1-year bull run. And then you have about a 1-year bear market. And then you have roughly about a 1 year of sideways chop and or upward momentum in Bitcoin before the next halving event. And then the next halving event basically repeats the process over again. Now, keep in mind, altcoins do bleed against Bitcoin during this consolidation phase and the bear market, but we're just talking about Bitcoin here since it is the largest cryptocurrency. So Tesla is based on the stock market, and the stock market has roughly 10 to 15-year bull cycles, whereas crypto has its entire cycle is about 4 years. And it usually only has roughly about a 1 to maybe a 2-year long bull market. So it's much smaller than stocks. So with Tesla, you would get like years upon years upon years of upwards price appreciation. So the third reason would be mass adoption of Tesla by the public. I can tell you guys right now, when I'm out and about driving, I'm seeing more and more and more Tesla vehicles. Obviously, Teslas are expensive, so those people probably make a lot of money, or they're either that and or very highly leveraged in debt with expensive car payments. But that's not my business. So what do I mean by mass adoption? Well, basically, mass adoption would be something like, Tesla takes, let's say, 10% of the entire market share of the car market. Okay. So between all the other car dealerships and Tesla, Tesla takes about 10% of the overall market, which is not unrealistic if the world is going to transition from gas cars to electric vehicles. It's a possibility that this could happen. I personally am still a little bit on the fence when it comes to electric vehicles, but that seems to be the way that things are going. So eventually mass adoption will take place. The next reason would be analyst estimates. Oh, there is one thing I wanted to mention too before I get into that. So back here on the third reason market cap, you guys can see that on August 17th of 2022, that was during the bear market when the Fed was most aggressive with the rate hikes, the bear market of last year, technical bear market. You guys can see that before the stock split, that Tesla was valued at $891 a share. So they were basically almost already at $1,000 a share. And they did a 3-to-1 stock split, and then the stock opened up at $3.02 or $302. Which, if we go back to Tesla on the chart here, you can see that it has actually hit that price target that it opened up at quite a few times. Basically, okay, so yeah, basically the stock split happened here, and then it dropped and then bounced back up. And then we went all the way down here, and now we're taking a look at possibly testing that opening price again. A stock split and an IPO are two different things, just so you know. But let's just assume that it goes back up to, and this does seem ridiculous, but trust me, it is possible. I've seen it before. Let's say that Tesla, even after the stock split, goes back up to $891 per share. Well, we would be looking at some crazy, and I do mean crazy, 237% gain. Now, let's assume that only roughly half of that was experienced in TSLY. Okay, so about 120% from the current prices of TSLY. So if we were to do 120% from the current prices, as you guys can see, Tesla shares would be valued at roughly about $31 to $32 a share. It seems crazy, but again, if Tesla is paying out 90 cents per share and it's a $30 share, that's actually still a really good deal when you think about it. Obviously, Tesla is at an extremely cheap price right now, in my opinion, when taking a look at forward estimates, forward valuations. So there is that. The next thing that I want to look at here is, as you guys can see, Tesla is among the largest companies in the world. We have $5 trillion companies. You got Apple is number one, Microsoft, Saudi Aramco, which they basically do oil. They're an oil-based company. Alphabet, which is Google. You have Amazon. And an interesting fact here, Amazon actually, apparently it looks like Amazon owns Twitch, which is a gaming platform. I did not know that. That's really interesting. The things you learn, right? So here we have honorable mentions, basically companies who have surpassed but not maintained a $1 trillion valuation, which includes NVIDIA and Tesla, and also Meta, formerly known as Facebook. So it doesn't say the exact valuations here, but we do know that the valuation currently of Tesla is at $860 billion, so it's not far away. So now the fourth reason is analyst estimates. So this was a piece that was written recently, and I'll leave it in the description for you guys below. It says Tesla jumps as analysts predict $600 billion value boost from Dojo. So let's read a little bit into this and see what this Dojo thing is, okay? Tesla rallied 6% on Monday after Morgan Stanley said its Dojo supercomputer could power a near $600 billion surge in the electric car maker's market value by helping speed up its foray into robotaxis and software services. For those of you guys who don't know what a robotaxi is, it's basically a driverless. It would basically be like a driverless autonomous taxi that you could use like some kind of touch screen to tell it where you want to go, and it'll take you there, and something like that. We don't know exactly what it's going to look like, but so it goes on to say Tesla, already the world's most valuable automaker, started production in the supercomputer to train artificial intelligence models for self-driving cars in July, and plans to spend more than $1 billion on Dojo through next year. It says that it can open up new addressable markets that extend well beyond selling vehicles at a fixed price. If Dojo can help make cars see and react, what other markets could it open up? Think of any advice or think of any device at the edge with a camera that makes real-time decisions based on its visual field. The Wall Street brokerage upgraded Tesla's stock to overweight from equal weight and replaced Ferrari's US listed shares with Tesla as its top pick. So Morgan Stanley goes on to say that it raises its 12 to 18 month estimate of Tesla by 60% up to $400 a share. Again, currently it's only at 260, so this would be pretty much back at the peak, the recent peak for Tesla, as you can see on the chart. And that would put the EV maker at a market cap of roughly 1.39 trillion, which would again have an effect on the price of TSLY. So if this thing, well, we'll just do the numbers here again. If this thing increases back to the peak, you're talking 46%. We'll put 23% on the charts for TSLY. Basically, it would go pretty much back up to where it was before. But as you guys can see, the price of TSLY didn't really move back up to the highs, or Tesla didn't move back up to the highs, but TSLY was at $18 a share. So there is actually a possibility that it could go even higher than that. We're just basing this on being roughly half of what Tesla would do. So the fifth reason that we're going to go to is artificial intelligence, robotaxis, the Tesla bot, and autonomous vehicles. Now, if you guys haven't seen the Tesla bot, go look it up on YouTube. Just type in Tesla bot. You'll see what I'm talking about. So it says Tesla is an automotive and energy company. It designs, develops, manufactures, sells, and leases electric vehicles, energy generation, and storage systems. The company produces and sells the Model Y and basically all these other vehicles. So you can see that they're in a lot of different industries. If we go over here to this next piece on the Motley Fool, you guys can see that, again, it talks about the dojo. It says that Tesla's dojo will use NVIDIA AI chips. Again, I've been telling you guys on this channel that we think that NVIDIA could be the kingmaker when it comes to AI chips, but Tesla, aka TSLY, could be the GOAT in terms of YieldMax funds. Tesla officially announced its newest supercomputer dojo. We read this already before for its self-driving vehicles. Along with the announcement, it was revealed the electric vehicle leader has also developed its own chip called the D1 to train the AI algorithms needed for full self-driving. So it sounds like Tesla had been priorly using NVIDIA's GPUs to power the AI training, but it sounds like from what this article says that Tesla is not only using NVIDIA's chips, but they may also be, they're either currently or they already have developed their own AI chip to go ahead and basically accelerate the AI growth of all the different products that they intend to use to spread out among the markets to gain more market share and have more use cases. So anyways, this is the 5 reasons why TSLY could be the GOAT of YieldMax funds, the TSLY ETF. If y'all enjoyed this content, please like, comment, and subscribe, and we'll see y'all later. Peace.